Do you have a 3% rate? Well, maybe if you're lucky, you do. A lot of people that have bought homes in the last couple of years have had much higher rates, but there could be some relief coming. Next week, September 17th, the Federal Reserve is due to end its latest round of meetings. Could we see a rate drop then? Right now, we are seeing a market rate for mortgages drop. Today, we're going to talk about that and so much more. Alex, good to be here with you. Back at home, back
Good to be
in
home.
Florida.
Yeah.
Technically
Excellent.
back in the South.
Yeah, it's good to be back home, comfortable, settling in after a long trip back to New Jersey. And we were looking at homes. We were looking at the market up there, and it's a tough market. But then looking at the market in Florida where we live here, there are so many homes for sale. It is unbelievable. I was shocked to see how much was up on the market. And looking at interest rates, we're 30-year fixed is anywhere between like 6% and 6.8%. You could get a 15-year for a little less than 6%. And I don't know. I wonder how much, Tyler, do you think interest rates, where people are waiting for interest rates to go down in order to buy some of these homes?
Well, I think it's interesting in different. We've talked about this before. You identified it going from New Jersey down to Florida. Market looks different. If I look
Totally
here
different.
in Washington, I was recently told that there are in our area, there's 25,000 potential buyers. There's 1,600 homes available. Now, I think, one of the things that I've learned is because there's 1,600 homes available, they spread across price range. So there may be a lot of median to lower priced homes, mid-price homes, high-price homes, and it doesn't necessarily mean it's lining up with the buyers. But I have to anticipate, especially if we're into a quote-unquote buyer's market in certain areas, like you mentioned in Florida,
Totally.
where interest rates easing is going to have an effect. But here's the challenge. And one of my previous careers, I don't know if I have shared this with you, I used to consult trading commodity markets. And there was an element of when you are in situations like we are now, and the market is falling, indications show that the market will be falling potentially with the rate cut next week. There's a projected that we could see 3/4 of a point come out of the federal rate between now and the end of the year. So we could go from 4.5 to 3.75 is the potential speculation, right? And what happens there, as I saw this last week, as I imagine you see, if you've ever, put any information to banks, whatever else, more people were sending me spam as far as, take a look at rates, take a look at rates. They are selling like crazy right now. Why? Because they know people are listening to shows like this or whatever else. Oh, interest rates are lower. Let me go out. And it's kind of like you don't want to, you got to kind of let see the bottom happen. And, there's an element of if trying to catch a grabbing knife, what was told to me in commodity trading, meaning that thing is falling and wherever you grab it doesn't mean it's going to be the bottom, doesn't mean it's going to be good. And so you're going to get cut. And the idea is, would you rather wait to hopefully see the bottom? Or are you in a place now, if you want to, kind of do some things, you're trying to mitigate some of your expenses where, all right, I look at refinancing, I look at buying now and knowing that, oh, I could miss out on a third or a half a point lower interest rates. If that means I need to step in and buy now that house, maybe that's what you need to do rather than waiting for rates to go lower.
And I was curious, Todd, and I don't know if you know this, but like how the banks are probably holding on to a lot of cash. Don't they want to? Are they incentivized to give out mortgages?
Yeah, that is absolutely the case. Banks right now, and I met with several bankers a few weeks ago, friends, and have people in the banking industry, and their business is really slow. Right. And the only way that banks really work is if they're getting cash in deposits or that they are actively lending money that gets paid back. Well, neither one of those are really happening as they talk about. And so they are looking for new customers that have a lot of cash that can provide cash. Number two is they're being very aggressive. Now, one thing that people, I think, don't understand, and I've had this conversation, I had to learn this, is just because the federal rate is X, it doesn't mean that other banknotes, whatever you could go get a loan for, is close to that. It's just kind of a recommended. So it's a baseline. It's a bare minimum. It is a standard, and banks can pick and choose where they price that based upon their cost of expenses or whatever else. So that's where right now we've seen rates falling, commercially, meaning what you could go buy available, even though the federal rate hasn't changed, because they know, oh, we better drop these rates because we need business, or it's coming. We're going to try to sell it before the market goes lower so we can hold, we can sell it at a 6% rate and the market goes to 5.5. We just made an extra 0.5%.
Right. And the other thing I know, when I was looking at this, maybe this was 2 years ago, you could also buy down your interest rate.
Yeah.
I can't remember what exactly they called it.
It's a buy down. I mean, that's what it is.
Yeah,
and so
I don't know if there was
essentially what you're doing is you're paying that interest up front to a certain extent. So you're buying it, paying them. It's like, hey, I'm going to pay you extra for the long-term life of the rate, because what happens is that money initially goes to someone. And so instead of them making it back up in the back end, you're paying some of the commissions up front when you're buying down that rate. Maybe not how they would describe it, but that's how I view it.
Another option out there.
Yeah.
And then the jobs. I mean, you saw the numbers come out. They were, again, providing more support to why the Fed should cut. Jobs aren't looking great.
Yeah.
Do you see that as like okay, you have jobs, which we both felt for a long time haven't been the truth. Like, a lot of people are looking for work. Is that number going to continue to fall? And if people are out of jobs, how can they afford to buy homes? Like, how does the home market get affected by this jobs number?
I think this jobs number is such a funny, fickle conversation.
Yeah.
Man, you go to anyone that is in quote unquote blue collar work, they're dying for people to, they have more work than they have people.
Yeah.
It's the quote unquote white collar. It is the, the businesses, the tech businesses, those areas. Quite honestly, the places where AI has surged, not entirely, but partly, where, those industries are slowing down. Yeah. And, you look at that to say, what it comes down to is, are you willing to go do the blue collar work? And I think that's where, it's kind of a funny conversation. We've seen, now all of a sudden it's funny. I would say, I don't know this, but, we used to see massive job numbers, up by 250,000. And then quietly a month later, they would say, hey, there was really 200,000 jobs that didn't really happen. Right. It was all made up. It was like, oh, so you've announced 250,000 jobs. Everything is awesome. Last month, we revised it down. It wasn't really that many jobs.
Yeah.
Oh, so you just straight lied to us. All right. So that regime has kind of changed a little bit. And so when we saw the numbers here in August, it was 22,000 new jobs, I believe. And they revised down June by like 14,000. Okay. It's pretty small. It's a much smaller percentage of, adjustment. I think they're probably, as when that happened administratively, there are a lot of people saying the problem is with jobs now is most organizations don't want to report the information. So you only really see it from the federal side that they have the numbers. Well, what have we known happened over the last 6, 7, 8 months? A lot of federal jobs have been cut, rearranged, right, wrong, or indifferent. And so I look at our jobs situations like, I don't know if it's still real or not, but I think people are really starting to understand, something, it just, whether it doesn't feel right. I had a conversation last week on my roundtable session, and there's a gentleman that's part of the group who is in his late 20s, early 30s, and myself and two of the other guys are in our mid 40s. And we talked about going through 08 and 09 and just kind of sharing what it was like and what the environment was like. And one of the things that we talked about is it was different, but yet, man, it was similar.
In what
It
ways? Like, yeah.
well, it was different because it happened so quick. We see this massive market rise in, stock market, in, commodity markets. You have housing just going like crazy.
Yeah,
And then all of a
gangbusters.
sudden the market tips, you see, more regulation come along. You start to see bankruptcies left and right, and it just falls. And, we
Mhm.
were talking, I mean, the market peaks, I think I'd have to look back exactly, but just me remembering really hit in like um the summer, late summer '07, maybe into '08. And then '08, it was like, all right, what's going to happen? We don't really know. And then all of a sudden you start to see where banks are like calling notes because they were running out of cash to cover cash. And, that's what's going to be interesting here is how much do interest rates um, preserve life? Like if I'm a bank, right? And say you
Yeah.
run a business and, all of a sudden we have you at a 8-9% business loan
Right.
and the market goes to, say we drop 3/4 of a point. Man, it would be really smart for most banks to go and reprice their people.
Yeah.
Because if all of a sudden, say for example, you have a business line and it cost you, $10,000 a month in interest. Okay.
Right.
Whatever the principal is, $10,000 a month in interest. And you go and change it and say, all of a sudden you're $8,000 interest or
Yeah.
$8,500. That's significant.
Yeah.
And that means the business is making less money. But if you look at the long-term health of the business and their clients, um, we'll see if that happens. But I look back at what happened then, and people thought they had plenty of cash, and all of a sudden, sales started dwindling, and they couldn't keep up with payments. And
Yeah.
if we start to see that happening, and I don't know if it's happening, I know I talk to different industries, and we've talked about this before. I think I shared this with you. I think one of the first industries to get absolutely beat up back in '07 and '08 was agriculture.
Right.
You know who's getting beat up right now? When I say beat up right now,
Right.
agriculture.
Agriculture.
We have the highest priced beef that we've really ever had.
Yeah.
And you would think, oh, people are making a ton of money. Yes and no. They're high priced because there's a lack of supply. There's really strong demand. And, as classic traders, you know what solves high prices?
What?
High prices. Because
Continue to
people
make
start
everything
looking for alternatives. They start to say, I can't afford that. I'm not going to buy. I'm going to go somewhere different. I'm going to do something different. So all of a sudden it comes back to that falling knife. And when you start slowing down in sales, what's the worst thing? If you had a business and you had, let's just say cows, right? And you
Right.
bought cows for, you bought a young cow for $4,000 a head, which some of them are
Mhm.
trading for right now. And you
Yeah.
have to put $1,000 into them worth of feed and labor to get them to market. Now, all of a
Right.
sudden, you have $5,000 invested in that animal. And the market goes to where they're worth $3,500.
Crushes them.
And that is happening. Like I made a joke with one of our team partners whose family farms, and they're getting into the time of year where it's harvest. And I'm being, and I made this comment, and I know it's tough, and it is the reality. Right now, people are in the Midwest are breaking out a calculator to say, do I lose less money leaving the crop in the field?
Jeez. Yeah. That's
That's the
scary.
reality of where prices are for corn and soybeans because of all their inputs, whatever else. The problem is they can't really do that because they need the cash to at least pay down some of the debt. I mean, they'll have no cash if they don't bring it in, but it's really, I'm going to go out there and I'm going to harvest this and put in all the time, labor, effort,
Right.
and I'm going to lose, quote unquote, lose more money than if I do nothing.
It's
And that
crazy.
is, when I look back at my experience in the dairy industry, there's a lot of times I remember guys like to feed cows today, to milk them, to take care of them and sell the product,
Mhm.
I will lose money.
Well, so no, I mean, this is great conversation in these signals from what you remembered back in 07, 08. I was a little young. I was just had graduated college, and just joining kind of the workforce barely at that point.
Yeah,
And
everything was awesome. You didn't
I,
know.
I did. It was like in the, all over on the over here. I was just like,
Okay.
22.
You don't know any
Yeah.
different. Yeah.
Yeah. And so it's good, to have that, from you. But okay, so President Trump has been calling for cuts, cut. This guy's this guy needs to cut. And then you have Besson saying we're going to have a strong fourth quarter. And typically Q4s are strong. But what happens next year?
Yeah.
What
I think
happens in
this is
January,
what you're going
February,
to
March?
see is, I mentioned earlier, getting all of these, man, I don't know about you. Sometimes you randomly get onto email, marketing chains and you don't even realize it. And then all of a sudden
Yeah,
you start getting these emails. I'm like, how did I get that? Why am I on that list?
right.
And I've seen a lot of those. I personally have seen a lot of those the last few weeks when it comes to like interest rates or phone calls about, hey, your business,
Yeah,
you're available for credit,
yeah,
like constant, right?
yeah,
They're doing that because they need sales,
yeah,
right? And also, I think when you come to this time of year, I work with a couple different marketing agencies. October through December is their like biggest time of the year
yeah,
because everyone drives Black Friday, Cyber Monday, end of year sales. And so, that's when some companies, their entire year is made is in this fourth quarter of sales. And so
yeah,
what can I guarantee? They will sell everything they can, right? We need to move it out of our market. We need to, when you look back at some of these, one of the things that often we've heard from Jerome Powell is, oh, the problem is tariffs. Or one of the articles we read is like, well, the tariffs have driven up costs. Well, have they really? Or have they driven up the perception of costs? Some cases they have. Other cases I know firsthand, they haven't necessarily because
mm,
the tariffs got pushed off, or what people would do is like, oh, we anticipate the tariff, so we're going to charge extra, but that tariff never really happened. So you can't blame the tariff. You just have to blame, market
them.
reaction. Okay.
Yeah,
You can't do anything against it. And so I wonder what's going to happen here is when we churn through some of these sales, some of the product and warehouse, whatever it may be, and get to the first of the year. And then everyone is like, all right, let's figure out where we're at. And, I think it's a pretty significant potential that here's what I believe. It's going to get worse before it gets better.
yeah.
It's
We
usually
talked
the
about that.
case.
Yeah,
And if I look at the long term of, to me, if you're sitting and watching this video and you're thinking, I hope Donald Trump fails, right? Meaning that I hope the economy just, fails, that this doesn't work. That's kind of like going to an amusement park and being upset that the person in front of you stepped in front of you in line, hoping that the roller coaster crashes right before you get on. Like,
it's crazy.
what
Think about it.
what value does it do for you and our country if we have a market failure and you get to point and blame? It doesn't
Well,
help anyone.
yeah,
But yet, I also sit here and understand, yeah, it's probably going to get worse before it gets better because it's a process. I've shared this before. I really look at the economy right now between interest rates, tariffs, sales, jobs, immigration. They are
agriculture.
trying to thread a a needle. It is
Yeah,
that finite, and you're like, all right, is it going to happen? We don't
something's gonna
know.
crack.
Yeah, and
Do
I
you?
think we're going to see it, and yet it's never if it's going to happen. It's how do we respond? And that's what I
Yeah,
look at what Trump has done in regard to all of the investment, all of the jobs. It's not going to help us today. It's not going to help us Q1. But if all those things come to fruition, 2027, 2028, it looks a whole
yeah.
lot different.
Well, do you? I guess a two-parter for you. thinking about it now is like, do you remember what interest rates were going into the crash in '08? And the second part to that is, we know '08 was a banking, home crash, right? Where would the
That's where it
crash even come
started.
from? Where would the crash even come from in this, if there were to be one? Like, where would we see it first? I know, we mentioned agriculture, you're seeing signals.
Yeah.
You mentioned energy, right?
Yeah.
Fluctuation in energy.
Yeah.
Like, I don't even know where it would stem from.
I remember a couple weeks ago, a month ago, maybe a little bit longer, we went through kind of historical interest rates. We brought up this conversation before and how high interest rates were in the mid 80s. And I
Right.
remember looking at that chart the last 50 years, and about 7% mortgage was a pretty common interest rate.
Yeah.
And I believe I remember buying our house in '05, and I think we were, what they were doing then is because they wanted to get houses sold, small Gen X, they were offering, 0% down. You would do like a 5-year arm, interest only, and then you could refinance after 5 years. So that's how they were getting a lot of people into homes. And what ended up happening is people got laid off. All of a sudden, sales slowed down. They could no longer make their payment. Well, they weren't making principal payments, they were just making interest payments. So
Yeah.
that stung because that was all of their revenue. And banks didn't have revenue because interest was, all of the cash they needed to operate. And again, that was a housing crash, right? You're overextended. You have, construction companies that, oh, we can get these sold, and they went from selling $300,000 houses to now they're only worth 150,000. That's probably what it cost them to build. There's no
Yeah.
margin there. All right. One of the things that I have believed since mid-COVID is, ooh, this thing is when are we going to see it? And I've believed like for 3 years, like, and something's got to give. When you just pour money into it and you just spend, and we see personal debt go higher and higher and higher, and just spending go higher and higher and higher. And myself, even looking at like our finances and like, oh my goodness, like things got more expensive. And like, I can't believe we spent that much. It's just, and you look at it and it's like, I really wonder if we're going to see where certain industries, instead of housing driving it, but are you going to see, we've seen more farms close in the last year than we had seen in the previous 5 years. People
Mm.
don't know that. You're going to see more of that slowdown. Farmers, they buy a lot of equipment, they buy a lot of supplies. All of a
Yeah.
sudden, they're not profit to do all those things. That money has massive impact that affects construction companies, manufacturing, and I believe it's. I don't know if it's going to be one sector, but I think you're going to see banks that are maybe heavily loaded in one sector start to have real problems. The
It,
issue is because a lot of them have been heavy on cash. We have this aging baby boomer community. I I think it's going to be more of a, they don't go insolvent. They just all of a sudden aren't bringing in enough money to turn, to keep going and operating. So what happens is they'll get bought up by other banks.
bigger. I already saw
You're
there was one today. I think it was a buyout. Man, I can't remember off the top of my head now, but there was a bank buyout today. Someone, a bigger bank buying a smaller bank. I just saw it on the news.
Yeah. And,
Um,
so I think you're going to see then, banks that try to take risks and say, oh, we're going to go heavy in, this industry, man, that's where a potential risk is. But it's just kind of like, I think it's a heavy weight on everyone. And, we'll see. I mean, it is, I think you start talking, we've talked about Vegas. Vegas is slower. You start to talk to like tourism. Everything is like, what I see and understand is that people have met and reached their financial like end of rope. Meaning, all right, all those extras, we're gonna slow down. Um, we're just gonna do enough. Just enough.
I agree with you. I think that we've seen things slow down over the past few months. I've seen it from jobs to homes just looking, I mean, even in Southern California, I look back at the old town we used to live in. There's a ton of homes for sale, tons of houses, that way more than I saw back 2 years ago. And in Florida, I think things are going to be more regional,
Mhm.
like we spoke about earlier, than it was like this national crisis. I think it's going to hit different states differently. But from a mass market approach, I do think that there's probably going to be a massive, correction come sometime 2026. Like you said, things are going to get worse, but then you got to look, things will get better. But President Trump, the regime is going to get hit. The
Oh,
news
of course.
articles and the media are going to go, "We told you so."
Yeah.
It's going to feel really bad and sting hard, but then typically after that, you'll see
Yeah.
the results.
Which, again, you look at it from just a strategy perspective. Trump came in and did a lot of things very quickly.
Yeah.
And, we're typically, and this has been the challenge of a lot of presidents, like time we can get everything done, then it's the midterms, and then, it's the last half of the term, unless we get reelected. We can't really change much, do much. He came in guns a-blazing. I think every person, either side of the aisle would say that. What is interesting to me is I think that was very strategic. Like, we got to get all this stuff done before the midterms to show some level of success. Or, as we, have talked about, they continue to uncover more and more and more, I would say, discrepancies.
Is that
And
what the term
those
you're gonna use?
discrepancies, I think, all right, you want to beat them up because of tariffs and economies, and yet things are slower. Well, sometimes you got to take a breath in order to keep swimming laps. And
Yeah.
I think there's an element of like, this is going to be a big breath. And I think comes back to is, you're going to see people that move into different industries, and you're going to see more individuals. I, read this all the time and see it. There are way more 18 to 25-year-olds that are embracing blue collar physical labor than a
Yeah.
previous generation. And that's a good thing. And I think there's going to be other generations. Are you willing to go out and do work with your hands? And if you
Yeah.
are, then fine. If not, then you know what? It's really hard, I think, to sit and say, well, it should be different, better. It's like you have the opportunity to go make it different and better. Just go do it rather than wish it was different.
Yeah. No, you're right. There are. I see. I'm driving all the time up and down. From where I live down to Miami. I see tons of advertisements all the time for drivers, truck drivers,
Huh.
everywhere. Everyone needs drivers. Why do you laugh?
I mean, I laugh about the situation where certain states have gotten in trouble because they've been corrupt, and they gave driver's license to truckers without passing, even understanding road signs in the US, and how that
Yeah,
has become so terrible.
it's
And that's why I
terrible, but
laugh.
it
Yeah.
seems like they're on a shortage of drivers,
Yeah.
though.
Yeah.
I mean, yes, no, I agree. They shouldn't be doing it illegally, but
Yeah. Yeah.
there's
No, I
jobs.
get what you're saying.
Yeah,
It's really, there is a need. Construction
yeah,
workers, trades. There is plenty of work to be done. And it's just a matter of, are
who's
people
willing?
willing to do it? And,
Yeah,
that's where it comes down. It's like, are you willing to do that? Are you willing to um, really be a solution rather than, complain? And I look at it today as, having been involved in the industries that I've been involved in, whether it's, what I'm doing now is helping people work through these things, or, in our network marketing business, and realizing, man, that created a lot of opportunity for hundreds of thousands of people that we were connected with out of '08, '09, and then for years gave them new skill sets, and delivered products to people that they could utilize. And I look at that as, I mean, it's always an opportunity, and there are ways to serve people and make money, and it's going to look different. If you're willing to be different, then you'll be
yeah.
rewarded.
Do you say like the tens, like going through 2010, or like the 20s? What do we
I don't
call
know.
it? Like, do you say? How
I
would
don't
you
know.
say
What
that?
do I
Like
say it? I don't know.
2010
The
to
10s and 20s. Yeah.
the
I mean,
the
that's what it was.
1910s and 1920s?
Yeah. Yeah. I mean, 60s, 70s, 80s. Sure.
You know,
90s.
right? The 10s
The
and the
one I
20s?
don't wear is the aughts. The zeros. And that's very British. That's
Oh
very,
08.
yeah, the aughts.
Yeah. Well, because you said 08, 09, but like I haven't heard anyone say, oh yeah, through the 10s, through the 2010, 11, or the 20s, which we're already in 25. Which is
Yeah.
crazy to think about. We're halfway through the 2000. I was going to say 19, the 2020s.
I think, for at least our life period, I think the early 2020s will always be the COVID period. Post
Yeah.
COVID, COVID,
Post,
it'll
yeah.
always be. It's kind of like, do you think
Post
that there's
9/11.
like, did your grandparents that were alive, and maybe not because of the immigration, but it's like, did they talk about the 40s or did they talk about the World War II period?
The war. It was always the war.
The war,
It was
exactly.
the war.
And so I think it'll always be COVID. I think it will always be marked with that very significant. It was COVID. It's kind of like, there's the 60s, but then there's the Vietnam era, the Vietnam
Yeah.
War era, like the 70s, the 80s.
The one I lived through was post 9/11. The post 9/11
Yeah.
era.
Yeah.
To the
Yeah.
attacks on the World Trade Center.
Yeah.
That's a term you hear a lot too.
I mean, as a teenager, especially. Like for me, I was in my 20s. You were just coming into being a teenager.
Yeah, I was a freshman in high school.
Yeah. Yeah. It's interesting. Again, how we remember and reflect on those things.
Yeah,
Yeah.
it's interesting. Yeah,
It's kind of like how you remember and reflect, week 1 football losses. Like,
had to go there. Well, both of our teams lost. Hey, listen, they
mine
played.
lost by a point. Does that
We
make
lost
it
by
any better?
2. We lost by 2, but it went down to the final minutes, final
Same
second.
did mine. Yeah.
And it stings a little bit. I didn't watch it, thank God, because I would have been probably screaming at the television, but I was flying. So we'll see.
It is what it is.
See how it goes.
I don't know. I didn't watch it either. I was busy doing other things, getting ready for a trip and so forth and so on. And I just it's one of those like, oh yeah, I don't know what to expect. I mean, you guys haven't. The Jets have a new coach. You have a new quarterback.
Yeah,
there's things to be excited for. And then I'm Cleveland. I'm like, oh yeah.
I know. It's just been so many years, Tyler, with the Jets.
Do you want
it's
to
hard
really,
to get
do you really want to compare?
Well, hold on.
years?
I know, but I lived through a period where it was the high school years, maybe early college years, where I could be like, oh, we're a solid team, we're competent, and we have a shot at the playoffs.
Was that the Vinny Testaverde era?
This was from Vinny
Chad
Testaverde,
Pennington?
Chad Pennington, Mark Sanchez, like those eras.
The butt fumble.
Right? Which was, we went to the AFC Championship
I
twice,
know.
which is like, looking at it now, it's like, that was the heyday. And now you go through a decade plus of being a loser. And it just...
Do I need to remind you the team that I cheer for? I was talking to some friends and we were talking about, the Tampa Bay Bucks and that, they pulled out a win yesterday, and the fact that, I mean, that could be a team this year. And talking about how Baker Mayfield, and somebody was sharing how Colin Cowherd, who is, if you're not familiar, sports radio, sports TV, sports commentator, who was just so against Baker Mayfield, tore him apart for years, and supposedly came out and said, dude's legit. And I made a comment to my friends, and I'm like, in my life era, you could probably say there's 3 great Browns quarterbacks. Brian Sipe, Cardiac Kids, early 80s. I mean, they were Bernie Kosar, of course.
Bernie Kosar, I know the name.
And I think most fans in Cleveland would say that about Baker Mayfield. Dead serious. Yeah. He is probably one of the most loved quarterbacks to ever put on a Browns uniform by the fans.
Crazy.
There's, when there is, the Browns fans cheer for him and just like, yeah, he was the guy. He's the one that got away. It's the one that got away. It's kind of like, did you see the guy who, I think he was Taylor Swift's boyfriend in like high school, took her to prom or something. And he, of course she gets engaged and everything. And he comes out, it's like the one that got away. And it's like, yeah, dude. Yeah.
She wrote all those high school songs in that first album about him.
And so then, Baker Mayfield, the one that got away. But I also look at that, and he wouldn't be the quarterback he is today if he hadn't gone through that adversity. Nah. Okay, great, but he'd still be darn good.
Yeah.
I mean, it is
too many stories.
Till next time, thanks for being here. Thanks for tuning in. Thanks for watching on YouTube. If you are, make sure to hit the subscribe button as well as the bell to get notified whenever we drop new content. Till next time, choose to lead with impact.